can AI generate a digital banking product? I think that will be the biggest contribution and innovation AI can bring to the banking space. Opportunity both in the space of e-commerce, embedded finance, computer vision, in the space of risk management, augmenting the whole credit decision making, the underwriting, the fraud analytics. A digital RM can replace the so-called the virtual RM or a back-end customer service representative or a call center agent or a collection agent.
Welcome to Forging Ahead in India by Bessemer Venture Partners, where we are looking to dive deep into several technologies across banking, healthcare, and consumer, and unpack some of the challenges and the opportunities that lie ahead for the founders and the entrepreneurs. We are going to kickstart with the banking tech infra space, TechFin, as I call it. And I have my colleague Anurag with me, and have a special guest today, Munish Mittal, Group Head IT and CIO of HDFC Bank formerly. And we are going to talk about core banking solutions. We are going to talk about evolution of core banking, microservices, today's agentic AI, the replatformization that's happening across infrastructure layer, across application layer, the hollowing of the core that's happening, how to build CRMs for banking, what are the opportunities that exist for the startups in the current ecosystem, how does pricing work when you are working with banks, and several other interesting pieces as we dive deep into Munish's expertise of having been part of building some of the most technology advanced platforms inside one of the largest banks in the world. And I hope we really enjoy this and we will do more of this going forward.
So, Munish, you've spent over 2 decades at HDFC. How did you start? What drew you into the world of technology?
Well, thank you first of all, Vishal and Anurag, for having this conversation. Make nostalgic to go down the memory lane. Actually, it was an accident. I wanted to be a research chemist, but a friend of my father, an ex-army officer working with a company called Punjab Wireless, she said, what are you doing? So I said, this is what I'm doing, working for some picture tube company as a research chemist. Why don't you join software? And I didn't know what was software. This was 1987, sometime around August, September. To cut long story short, that's how I got into computer science. There was the only place I could have learned computer science was a Department of Electronics setup called Regional Computer Center in the town Chandigarh where I lived. And it so happened that the moment I finished that course, I got an opportunity to work for a company which was at that time one of the 5 companies involved in what was called mechanization of Indian banks. And that's what got me into banking, luckily, from day one of my software career. And I got an opportunity to work with a team which wrote the advanced ledger posting machine software for the banking industry that time. So the objective was to automate, eliminate the physical ledger, change it to a computer ledger called ALPM, advanced ledger posting machine. So we wrote current account, saving account, loan account, payroll system for nationalized banks. Fast forward to HDFC Bank in 1996. So from 1987 to 1996, I think I got lucky again with the HDFC Bank. If you recall, those days was the days when there was no core banking yet in the country. Private sector banks had just happened from, between 94 and 95. I think the whole modernization happened in 92, 93. And so I was working for a bank called Bank of Punjab Limited. So since I was associated with banking software, that was the first opportunity I got to get work for a bank, which was in my hometown in Chandigarh. It was headquartered there. And the trick was that we had made ATM online with an Infosys Banks 2000 software, which was early avatar of what is called Finacle today. And that was my only qualification to get into HDFC Bank when I was interviewed, that I can make an ATM online with a so-called total branch automation TBS software. Those were, I think, some of the early, opportunities I got in my life. Uh,
Awesome. And you touched upon core banking, and you've designed that journey with HDFC over several years. Would love to understand what were some of the foundational bets that you took during that HDFC journey, which played out and resulted in massive outcomes as the bank scaled.
I think more than me, if we talk about the bank, it will be a probably lot more prudent, and uh, I think bank has been lucky to get the best set of leaders. Uh, it is all about the vision of the management, right from Mr. Parekh, who had a vision to start a bank which will be the the Indian foreign bank.
Hmm.
I think that was the
That
vision,
was the vision.
and that was a vision which Aditya co shared with Mr. Parekh, that we want to create a international bank in India. Uh, Coming to your specific question, I think the IT vision of the bank was set by my predecessor and the first CIO of HDFC Bank, Mr. C.N. Ram. And his vision was very simple. His idea about banking in India was, from a technology perspective, that it's been a long time, banks have done a lot of work for customers. It's time now the customers do some work for the banks. And the whole idea about self-service, 1995, we're talking about. The whole idea about self-service, making the account accessible, taking the appointment away, planning a visit to the bank, all of that, his idea was not to be done. The customer should be able to do banking anywhere, anytime. Later, we added anyhow when the SMS and internet came, right? So the first few foundational, bets was against most other private sector banks which opened between 94 and 96. The bank decided we'll have centralized core banking. I think we were the only bank who said we'll have a centralized core banking. Probably one of the 2 or 3 banks of the private sector, 9 private sector banks. Second was that we'll have central processing. The branches, whatever we will open, will focus on customer service and sales, engagement with the customer. They will not do the processing in the branch. We'll have centralized processing. And we created the whole culture and ecosystem in the country of central processing units. Then we say we'll have to be OLTP, online real time. So anywhere, anytime, anyhow. So telephone banking. First, telephone banking we set up with the core banking online. ATMs we set up online real time with the core banking. Then we not only did this, I think some of the other foundational bet was that on the technology side, we had a separate core banking system for wholesale, separate for cash management and transaction banking, separate for retail when we started retail around 96. Originally, the bank was a wholesale and treasury and transaction banking services bank.
Hmm.
Also, I think the second side of the pillar was early bets is the product innovation. I think which bank had the vision to bring credit cards and debit cards to India beside foreign banks? Citibank brought maybe the credit cards to India, right? But real credit card market opening up happened when HDFC Bank got it in. Much later, maybe I think 2006, 7 or 8, or even later than that. But debit cards in 1997, 8 were brought on the product innovation side by HDFC Bank into India. Only bank to invest in a non-stop technology for 24/7 availability of payment services through use of credit, debit, and ATM card. So I think many such early bets HDFC Bank took, which laid the foundation of the so-called born digital bank.
Yeah, you described the evolution beautifully around how sort of core banking, different layers of core banking, and how that evolved over the years. It's also very complex. Can you describe the level of complexity that we're dealing with when we talk about that banks take very long to or even touch the core banking system or follow out the core is a term that's used like a lot today. So how do you see that? And what are some levels of complexity?
I think when we are dealing with or when you're operating as a custodian of somebody else's money, it is incumbent on you to be one resilient and second prudent. And that is what adds complexity. in trying to change, evolve, modernize, what we call become more digital. And I think to some extent, institutions like HDFC Bank decoupled the problem to a great extent early on. So, like I said, we had horses for courses, separate core banking system for wholesale, separate for retail. So anything we did with retail did not touch corporate. So to that extent, it was easier to change because you did not have to disturb a lot of the running machinery, right? But that brought a problem of integration. That when you have 4, 5, 6 different core banking systems, so we had separate credit card system host, separate retail host, separate wholesale host, separate depository host at one point in time, separate lending host, the loan management system. So we integrated them both. Initially, we started, again, I think thanks to the vision of the bank, we started data warehouse as early on as 2004. On the resilience front, we invested in architecture and technology and infrastructure for disaster recovery and business continuity in 2001-2, right? And coming fast forward to your question about evolving for digital and how did we solve the problem, I think one, we made our core banking systems, both credit card, depository, and retail, first of all, accessible through internet banking. And we rode on initially on the ISO interface, which we had built for cards, between the payment switch and the cards. So it's very important to keep it simple. Use what you already have. You don't necessarily need to do a biopsy and a surgery to build a separate interface. So we used socket interface. We used existing channel of what was mandatory for core banking providers to offer ISO 8583 interface for the banks, for the cards. So we wrote on that for internet banking. We wrote on that for telephone banking, right? And then later we, of course, built a socket programming between internet banking and the core banking. Once we had ability and a rich set of transactions in internet banking, then we use that for other channels, right? Channels like call center, channels like CRM, transaction through CRM, channels like mobile app. So our mobile app, when we built it, it reused complete plumbing which was available for internet banking. So I think keep it simple, reuse what you have built. In parallel, keep laying foundations for the modernization, like APIs, in parallel, and gradually, like the Arab and the camel story, right? Can I get my nose in? Yeah. Can I just get my head in the tent? It is a sandstorm. So like that, keep building back in the background small little proof points of the so-called modern and technology in the vogue. And then once you're ready, mature, you learned, then it's easy to introduce. By the time organization already has started, seeing the value. So when I went to my management for bigger funding, I could point out, look, we're opening FD already online, real time. How do you think it's happening in all 3 channels? Oh, it is happening on API. So now I need an API middleware. Now I need an API gateway. Never had a problem beyond, 1 minute is ever I spent ever in CEO's office to get approvals for funding because of this approach.
One question, almost 25 years back, I was part of a software services company and we were looking to buy Temenos at that point of time. And it feels like the core banking structure has evolved. What I call the 1.0 of the 1970s and the 80s, which was built on mainframe and COBOL.
Yep.
Then in Indian context, when HDFC Bank, ICICI Bank, and several other private sector banks came into place, you had iFlex from Oracle, which became Oracle Financial.
Yep.
And then Infosys had Finacle essentially, and those 2 products. Do you see that there's a third generation now effectively of core banking solution where it's moving from what I call a system of transaction to a system of record, and all the transactions happen outside of that ecosystem and it slowly becomes a system of record? And with this new AI wave, there are lots of systems of actions and systems of transactions, agentic AI that's happening on the top. It's still very, very early. We don't know how they are going to work, especially in a secure, very sensitive environment of a bank. But how do you see this evolving and in relation to a core banking solution as well?
So what you just described, Vishal, I think is platformification of the banking service, right? And on in that in and all platforms are built on a foundation. Core banking will continue to remain the foundation. I think you can never take, whether we call it a system of records, whether we call it a product processor, whether we call it a core banking system which offers, let's say, 4 services broadly: ledger, accounting, payments, and product. So these 4 things will potentially continue to come from a core banking system. It could very well become 4 microservices, like all the front end capability of origination or smart originations, agentic originations, right, using AI, will definitely come out of it. The whole governance of the transaction and transaction integrity management, authentication, risk management, all of it will come out of core banking. Maybe accounting also will come out of core banking someday. I think statement and balance probably is already coming out of core banking into separate. So I think what we see evolving is the whole. It's now easier to define platformification of banking service and the platform, but core banking will remain. Somebody has to provide the function of being a product processor. In the modern, you know, from first the 1.0 which you described from of 1970s to maybe 3.0 or 4.0 or flex cubes and the finnacles of the word, to what may be the modern, without prejudice, if I have to say, thought machines and the mamboos of the word. Uh, the successful platform will always have a strong product processor in the foundation there, right? Can you define the product outside of the CBS? That's not a question which I think we are ready to answer today. So we could create entire system of actions, and outside, uh, we can create the experience layer totally outside. We can create the efficiency. So we can take efficiency out of core banking, sure, right? And we can also create, if I take liberty to just go back one step, what did things like core banking and CRM do to banking? Especially the modern banking of last, let's say, 10 to 15 years in India and maybe globally also. I think they took the domain knowledge out of operations and experts in the bank and put that in core banking. So the business logic substituted, right, their knowledge. Today, if you ask somebody to compute a tax and interest for a premature closure of FD, you will not find a banker, perhaps even in some of the strong, largest nationalized banks, who can give you the algorithm for that. That's what core banking did, right? But today, we can take the entire efficiency and algorithm of decision making and multiple product definition capabilities also into the system of actions layer, use agentic AI. So we can further take domain knowledge out of core banking systems, the product definitions out of core banking system, and put them from business rules, which rules engine, into agents for AI today. So I think that's what I see as a broader picture. So we would rather say a platform in which in foundational layer a system of records will sit, and probably a product processor will sit, and then something else will sit on top, and then comes the workflow layer, then comes the content layer, knowledge databases layer, and I think then comes the integration layer, and what will sit on top will be the agentic and analytics layer, which will probably cut across more as a horizontal also. So it will sit both at the upper crest of the layer, just below the headless e-commerce, right? And also it will sit as a horizontal.
The API first, which started probably what you were describing as early days when you did some of that in the 2014 onwards, first starting with interbank before exposing it to outside. that sort of has led to this explosion where now banks are connected to several API ecosystems. But they're also now worried about the amount of different APIs that are integrating into banking ecosystems and making straight-through processing decisions.
Yep.
And as this world progresses to from only intelligence on AI to actually agentic AI, somebody is actually an agent coming in and making a decision and executing a transaction end to end. What challenges should companies who are building these ecosystems think from a bank's perspective and say, this is what the banks are worried about. This is what we should be thinking when we are talking to uh, potential customers inside banks. And they will have different use cases, whether it's risk, as you said, it could be fraud, it could be analytics, it could be solutioning on the customer relationship side, or actually opening an FD on my behalf or somebody else's behalf. What is the bank worried about the most, and how should founders think about pitching this to prospective banks in the long run?
I think 2 or 3 areas where it is completely greenfield, which startups and fintechs who want to take their solutions and their innovative products to the banks need to keep in mind. One of them is there is potentially not a very great deal of knowledge, skill, and capability about AI, which is present inside the banking system today. Probably everybody, including us, is dealing only with the surface.
Yeah.
Right? So if the fintechs can take, the startups can take a reasonable amount of AI consulting from a technology perspective, along with the innovative product and service they're taking, I think that will be very helpful and useful. Because end of the day, the banks learn from the vendors, from the partners, from the big techs, small techs, startups, mid techs, all of them, right? Nobody is already learned. Everybody is learning. So if along with the product and service, if one of the things fintechs can take, I would believe it will be consulting and knowledge about what AI, how AI, right? Why AI. Second thing, if they can take is, okay, what should be a enterprise architecture in your bank? Do you already have one, Mr. Bank? What do you have? And therefore, where does my product go and fit? It's like a space station. You launch a rocket, it has to go dock somewhere. Right? So where does it go and dock? How does it dock? At what frequency, speed, latitude, longitude, what lambda it has to dock on? So do you have an ecosystem where I can come and fit in? Right? Are you willing to use my architecture if you don't have one? And if we both have, I have one and you have one, can we complement, supplement each other and integrate? So I think this whole space of enterprise architecture for AI, and I would believe nobody has it today, right? Everybody will have it. The big techs will have an idea and they will probably have an architecture, including a blueprint and a deployable architecture.
Yeah. And just in that context, in the context of AI, as we've seen historically, tech spends have really scaled. It's now almost 10-11% of OPEX for banks. Some of the large banks spend almost $1 billion of their top line in terms of just tech readiness, tech adoption, changing the bank. AI is going to be such a core component, as we've unraveled during our chat, even for the bank. How does a bank make a build versus buy decision where you're putting so much layer of trust in such a massive spend pool over a period of time? How do management teams would think in today's time in terms of what to build in-house versus what to buy from either consulting firms, large service providers, or fintech founders in terms of products and solutions?
There is no silver bullet for this. I believe it will be very bank specific. And those who do not have the either in-house capability already created, set up, whether mature or not, doesn't matter. Or they don't have an existing partnerships with somebody who can build it for them on a commission as a custom build, right? They will have to depend on buy, right? And those who have the capability, some banks have in the, I think, specifically in the last 5 years, Indian banks I'm talking about. Foreign banks, a lot of them have a tendency to set up a development shop, offshore development center, whether in India or in Philippines or somewhere in East European countries. They've all set up offshore development centers, and that's where they're building their technology, especially the application layer technology, right? But Indian banks, I think many of them in the last 5 years have created this capability both in-house and they've also created captive partnerships where they are even writing new core banking systems, which they will move to eventually in sometime between now and the next 10 years. They will move in bits and pieces, component by component, microservice by microservice, but they'll move. So I think if I look at it, your question in a slightly different manner, for change the bank, transform the bank, adoption of AI, irrespective of bank's capability, irrespective of bank's evolution in terms of knowledge, domain knowledge, technology knowledge, space, irrespective of the architecture, the successful AI adoption will depend on a good mix of use of big techs, where absolutely mandatory. So LLMs, core infrastructure to train the models, large compute power required, which will sit in the big tech cloud or in the large cloud service provider. I think so. There is an inevitable partnership for the basic infrastructure, data infrastructure layer, core infrastructure layer, compute infrastructure layer on big tech. On a use case, on a business case, I think it will be best for financial institution to take a dual, a two-horse rider, a two-boat traveler approach. And on the dual-prong strategy, work with a partner for speed to market, for using their innovation, which they have built, right? And see what works. I don't mind, again, dipping into my personal experience and that of my bank's experience. We worked with something like 30, 40, maybe more, 50 startups in the journey from 1994-5 to the time at least I was around. I don't know the situation now. You mentioned in your early introduction, Vishal, Oracle, core banking FlexQ. I'm sure you will remember it was a startup called Cittal.
It was Mittal.
Not even iFlex.
Yes.
Right? It was a startup. CRM Next, where we were the first bank to deploy CRM, was a startup. A consumer durable LOS with Lentra was a startup. With Nucleus core lending system was a startup. And then fast forward, conversational AI, the EVA, the electronic virtual assistant of HDFC Bank, was a startup called Senseforth. So I think the successful model is partner where it is possible. Focus on your core business, which is product, right? And if there's a product innovation available outside and a technology innovation available outside with a startup and fintech, bring them in, right? And bolt it on. Make your product offering superior, make your customer experience complete. So partnership. And I think in parallel, start blowing the bubble of developing yourself and see what works. Right? It will also de-risk you from either being, logged in with a partner or being, left out. So I think that's what I would suggest.
Got it.
One question I have, Manish, is like products and services of banks and how they're delivered have changed. The products more or less have remained the same.
Yep.
How they're delivered has changed dramatically over years, right? So there's this change the bank, run the bank sort of conversation that happens, and I'm assuming it's ebbs and flows. There's a transition where CTB becomes larger than RTB, change the bank and run the bank. But if you think about this conversation on partnerships with all the new stuff that you described, which HDFC Bank was sort of a pioneer in sort of picking a lot of startups and working with them. Do you think Run the Bank also has similar pieces, or those become typically large application layers with big techs? And there may be transition happening today to your original question from, data warehouse to a data lake to now going to a lake house where you can deal with both unstructured data and structured data. So there's a transition happening in that ecosystem as well.
It's a very complex question you asked. First of all, I think if I try and break it into 2 or 3 pieces, if you don't mind, one part of the discussion I think is around the play of technology and like AI in the run the bank space. Right?
Yes.
If that's your question, absolutely. Both on the product side as well as on real resilience side. I think the big use of AI is in the cyber security, information security, intelligence based monitoring and automating the decision for running the bank, for repair, for self-healing. The whole concept of the firewall, the web application firewall, should be all AI today. Agentic AI. It should automatically examine happy path and rogue path. The conversation we used to have 5, 6, 8 years back, when the digital was happening, we were primarily obsessed and worried about zero-day attacks. But has the problem been solved? No. The organization is still getting hacked. Especially the part of world I'm living in these days, I see them getting hacked all the time. AI has a big role in being able to prevent zero-day attacks. And but coming to the product part, I think that was part 2 of your question. That and I want to quote the example of the 10-second loan HDFC Bank. You said the products haven't changed. It's the same current account. It is the same ultimately debit and credit, right? So what I'm looking forward to, and I think what is another white space, which is a big opportunity for fintechs and startups and incumbent large banks also, is can AI generate a digital banking product, whether on the fly, in real time, or near real time? I think that will be the biggest contribution and innovation AI can bring to the banking space. Let's say I am on a banking app, banking come share trailing app.
Yeah.
Now, what is hyper personalization in this journey? Can it try and understand why am I selling shares? Right? Am I churning my portfolio? Do I want to invest in something else? So can I apply the algorithm and create a digital product? Right? For this customer. So the whole concept of hyper personalization and creating a customized product, which could be a combination of a consumer durable loan with the combination of breaking off a fixed deposit or extending a personal loan or so on and so forth, or selling a portfolio asset class, converting into another asset class, 2, 3, 4 things packaged into one. So I think that's a big opportunity.
One of the challenges on hyper personalization, and I've seen several companies try to do this with banks, is sort of a lot of us still receive SMSs for a pre-approved loan of 50,000 rupees. We are not necessarily the customers for that.
Yep.
Like you would receive a BNPL product offering, lots of calls. So it feels like for a outsider retail individual who doesn't understand all the complexities that reside in a bank, it feels like they don't even understand me personally. I have a bank account with you.
It is difficult. Uh, and it is complex. And it is true. It's not just a feeling retail individual consumer have that bank has my bank account and has my transaction journey history and still is making an offer or sending an SMS which is not relevant to me. So and there are 3 or 4 different parts of I think this complex problem. First one is that I think the financial services environment in the country and probably globally is an arm's length operation. So insurance as a product or as a service, both on the risk side as well as on the investment community side or a combination. So insurance. Now I'm talking about life insurance. And similarly on the health and general insurance. So all 3 segments is necessarily sitting outside, and there is in India, for example, IRDA. In some other country, there will be another regulator. Equity mutual funds, they're regulated by different entities. So they are also sitting at arm's length, right? So that's one general complex, real life complexity, that there is an arm's length operation and different entity, different regulations, which the ecosystem of financial services has to apply and deal with in bringing this 360-degree view, in knowing the customer, knowing the cross-holding, and integrating it all together, right? Then the second aspect is the law, the data privacy acts, right? That is essential part of who owns the data, what can you do with the data, who has the right of being forgotten. So that is that second aspect one has to deal with. I think that is still evolving. The third real aspect, now if we leave all of this aside, within an enterprise, let's just take the 5, 6, 7 different products within a bank. So you have a current account, you have a saving account, you have a fixed deposit. Let's say for argument's sake, you have your public provident fund account also now, the same bank. You have a credit card from the same bank, your debit card from the same bank. You also have a depository account. And let's say for argument's sake, you have even an investor service account to invest in mutual funds and so on in the same bank. And the bank still don't know about you. So I remember when I was dealing with this problem. My biggest issue was that what has the customer given as a feedback to a campaign, to a personal loan offer, to a buy now, pay later kind of an offer, a consumer durable loan offer, a pre-approved car loan, home loan offer, and we keep sending the same thing again and again, was we never captured or recorded or stored that what did the customer say?
Or he didn't say anything.
Or he didn't say. The silence was taken as an act of confirmation rather than an act of denial. Saying, I don't want this, stop troubling me. So we built something called closing the loop. And again, we worked with startups, fintechs. So within the bank, I think that is a space where people have to invest in closing the loop. And then it's not enough to build that analytics, build that lake house extension of databases. It's very important to feed that back using APIs, have an intelligent agent of AI also calling the agent of response analytics in real time before sending the next offer or making a next offer within an existing, let's say, open session on net banking or mobile banking. Can a startup build a real-time or a near real-time enterprise offers engine and a genuine one, I don't see anybody attempting it because it is not easy. I personally have grappled for 10, 15 years and went through four re-engineering and re-platforming and re-innovating exercises to create an effective enterprise offer layer. And it is still, I think, I don't know about last 5 years, but it is a long way to go. And hence you get this.
Great. We also have a lot of budding entrepreneurs, fintech operators, and founders who are looking to build software products for the banks. In that context, what are some top of mind initiatives from a bank CXO lens that are relevant in the context of core modernization, where some of these operators and entrepreneurs can actually build interesting products and serve these use cases today?
I think it is the opportunity is ample for business product innovation, for collaboration of this so-called startups and fintechs with the banking partners, banking players. Uh, Take an example of what happened in the DSA space, right? I think those were early days of the so-called fintech
Yeah.
evolution in the country. Apna Bazaar, Policy Bazaar, some of those. So they created a digital DSA. And while they attempted to maybe disrupt banking, but what they actually ended up doing was create a layer of experience in the front, right? Then came the next generation. So look at the most successful fintechs today. We can talk about people like Bajaj Finserv,
Yes.
right? Probably the most successful
Yeah.
outside the mainstream banking.
Yeah.
Though from the NBFC world, but they offer experience, they offer speed, they offer efficiency, tremendous amount of efficiency, and not necessarily they built all of their technology themselves. They used some technology which was commercially available. They built some technology themselves as a secret sauce of their own, right? And they built a successful fintech business, true fintech, finance and technology combination. And now I think then if you look at the next wave, which happened in payments, the payment gateways, the Razor Pays of the world, the Pine Labs of the world, uh, some more names, I think, in that space, which I may not be having top of the mind recalls. That was also a parallel, I think, fintech revolution, which evolved. Uh, and 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 these days, I think today there is opportunity both in the space of e-commerce, embedded finance. There's opportunity in the space of computer vision. There's there's definitely great opportunity in the space of risk management, augmenting the whole credit decision making, the underwriting, the fraud analytics, the early warning systems. So I think on the credit and risk side, AI as the backdrop of technology is a sweet space or sweet spots where fintechs can come and start collaborating, supporting, and some even attempting to disintermediate or disrupt the banking system. Another very interesting space and something which we have seen in our portfolio companies, I was extremely impressed when I engaged with some of our companies dealing with complex side of the corporate banking, the wholesale banking, the small and medium enterprises and MSME. There is a big white space which needs to be addressed. And I relate with that very strongly. I think that's a big opportunity for startups and fintechs to play.
And in your experience, having partnered very early on when you were sort of doing some of this new innovation into HDFC Bank and you decided to sort of buy and partner with uh, like a new age startup versus sort of building it in house. What should the founders who are building these startups think about talking to banks, large banks? The how do you get buy-in?
Yep.
For your product? How do you get buying for in innovation? How do you get buying for pricing?
Yep.
Because that's a constant conversation on pricing. Uh, and what's it when you are on the other side or you are on the other side looking at this founder company, probably not even a few $1 million in revenue. What were you looking for when you were partnering with them, and which sort of archetype made you partner, and which sort of archetype did you say maybe not this one, the other one?
Yep, yep. I think the more the things change, the more they remain the same. So, I'll try and share my thoughts in a little random manner on few things you touched upon. I think first let's talk about what should the founders know and go with. The sales cycle is very long in large banks for the fintechs and startups of today.
Hmm.
And the reason it is long is the banks are just grappling with too much, right? There is too much of supply
Hmm.
vis-a-vis demand. So I think that's one problem. So we have a excessive supply side problem. So they should keep in mind that they have a fit. So I think they need to research upon somehow, whether primary research or secondary research.
Or talk to you.
Or talk to people like me, of course. Right? At least the bank will not send you back saying, no, I don't want to. Right? Second, I think if I look from bank side now, it takes two to tango. The banks also need to be willing to. So the business head and CIO CTO of the bank, these two and the top management, or the three, I think three partners, this triangle, all three together have to be willing to engage with the startup and partner. And usually they will be willing to engage for two reasons. Especially the business guys. I think they would love to engage. One, do you bring the least impact on my P&L? One. Second, do you offer a slight variety from what I'm already using? So do you know how many Salesforce automation system or how many LOS the top 5 private sector banks are running? Take a guess.
Double digit?
Yeah. Right? So there is always a room for an 11th one, a 12th one. So the business guys would still love to partner with, even if there is no white space, with the fintechs and startups. Because as long as there is slight variety and variation they offer, so they will engage. But the resistance and the problem is that IT is too busy. So they must take something for the IT. That I make integration easier. I don't demand too much from you. I'm mature. I know what problem you're grappling with. I will take up this on myself. So I think if they do this research as to who in IT to talk about, the right person. And most times it's not the top guy. Right? It could be somebody sitting in the third layer from top in IT. Who wants to shine, who wants to rise, who will take leadership, will integrate, and will go convince everybody else in the ecosystem. So I think that is also what was our approach. So low cost, ability to experiment, start small, and it's not that we did not spend big with big tech. So. But we invested heavily with big tech on the infrastructure technology. But we invested on the application technology with startups. Right? So it took two to tango. We were willing to take risk. And some of the ideas, let's talk about small things like disaster recovery, business continuity, and automation of it. That it is not human beings who will execute the workflow of switch over, switch back. Nobody would have given me money to work with, let's say, a Cisco or an Oracle or an IBM or a Microsoft, right? But everybody was willing to give me money to work with a startup because it was either 1/10 or 1/100th of the cost, right? So I remember we worked with somebody called Cenovi, and look what happened to them. They got acquired by IBM. It is not necessarily that they have a complete product, the startups and fintechs. They should also carry a belief with them that what we are taking may be an innovation, may be filling a white space, but it is very likely to be grossly incomplete. Not little bit incomplete.
There's also this constant friction, right, in terms of the same pricing model conversation, that fintechs would like it to be a usage-based pricing. And I'm talking about the curve after the first bank or the second bank that they've been able to garner and establish that product when they would like a usage-based pricing, and the bank would want to have a fixed pricing over a period of time so it doesn't scale with volumes. And hence the ROI conversation for a bank props up that also has to be in mind of the fintech entrepreneur who's looking to sell to that third, fourth bank. What are some instances where you've seen this ROI math work beautifully, both for the bank and for that fintech entrepreneur?
I think this is very interesting conversation. As long as fintechs understand that there is something called a transaction cost, which banks compute, they should be able to sell anything and banks will buy anything. End of the day, you remember the discussion, Vishal and Anurag, where we said, how much does a call center transaction cost, let's say, a foreign bank? Right?
Yes.
So I think sometime it used to cost $10. Sometimes a personal banking transaction in the branch used to cost, let's say, $100. I'm talking 20 years back, right? At least I'm talking, say, 2000, 2001, 2002, when internet banking was to happen, right? Or mobile banking, early stages of SMS banking was to happen. Direct banking was to happen, basically.
Yes.
Right? And now, digital transaction costs us X dollar. A UPI transaction, do you want to take a guess how much does it cost to let's say, top 3 Indian banks? It costs more than the value of the transaction which is being transacted, right? So there is a transaction cost which the finance department both tactically and strategically computes to have their. They need to compute a P&L. They also work for the shareholder. They also work for the consumer, right? Even a nationalized bank has to pay a dividend through Reserve Bank to Government of India. So there is an investor who demands money, right? So the pay-per-use model is we at least made some decisions of agreeing for a perpetual license, enterprise-wide, a term license with a tiered pricing, pay-per-use pricing, all based on transaction cost. I think the biggest effort between me and our CFO was, can we arrive at the cost of transaction? And it is the most complex subject. And that's another white space. If, for our startups who will be listening to this talk, a product idea I can give them, can they carry an impeccable computing cost per transaction to a bank as a solution using AI?
Fascinating idea.
Okay. And banks spend a lot of money in this. Banks spend money building up the so-called financial analytics, the CFO office automation. Remember the products like Cognos?
Yes.
Which used to be there, the budgeting and planning products, the financial analytics, the management accounting product, the transaction, the transfer pricing products. They cost a lot of money, the so-called financial ERP. That's a very big white space for startups. So, and what I think the startups and fintechs must ensure that is this skin in the game of the bank or not? That they should contractually establish. There's a life cycle and life stage associated.
Yeah.
They're excited to walk into the stage 1 and assume, oh, they will give me a pay-per-use. क्यों भाई? तुमने पहली स्टेज में अगर नहीं किया, बैंक बाद में बोलेगा तू ले जा, नहीं लेके जाना, मेरे साथ रहना, तो मैं तो इतने पैसे दूंगा. Now it's a rock and a hard place situation. So they should know the art of negotiation well, and I think that is where this our ecosystem of partnership as an investor with the fintechs and startups can be leveraged by them. Right? We have experts operating as advisors globally available who can advise them.
One of the questions we typically get is, and banks are buying from big tech, the pricing negotiation is very different. and it doesn't happen that much. And this may be just an outside-in view, but when it happens with a small tech, it is very different. What's your own experience?
No, I think banks are very fair. Most banks are very fair to the startups and fintechs. And I can put hand on heart of what I've seen. I don't see fintechs or startups not being paid genuine and reasonable. I'm not talking about the stage at which they get paid, but eventually, uh, I don't think there is a tendency to just squeeze and extract every drop of blood out of fintechs and startups in the banks. Negotiations are they different and with big tech and vis-a-vis with startups? Yes, because big techs have mature technology. They invest $10 billion in technology R&D. How much does a fintech or a startup invest? The bootstrap money or a seed funding.
True.
So, right, everything is comparable. End of the day, what you sow is what you get. Right. The other reason, but again, having said that, it is very fair comparison. It is equally hard and strong negotiation with the big tech. A platform which the first mover advantage consumer will buy from a big tech, let's say, will cost X, because it will be very hard negotiated. The same platform which the second or the third or the fourth consumer will buy will cost 10x. Right? So, for example, I signed a perpetual unlimited license agreement for infrastructure technology, first bank in India with the big tech. It cost me X. The third bank which signed, it cost them 3x. So therefore, they can't negotiate. But the first mover will be able to negotiate. Similarly, fintech, if they got one bank as a partner, they could not negotiate with. The third bank, they should be able to negotiate and say, well, listen, it will cost 3x or 4x because I have a proven product and a proven integration. So I think it is very fair compared to the size, compared to the investment, right? वो हिंदी में कहते हैं ना, जितना गुड़ डालोगे उतना मीठा होगा, right? So more they invest in their own product, more bargaining power they will have.
No, that's a very good takeaway for a lot of people to think about as they have these conversations with banks.
Yeah. You mentioned that there are often several dozen systems, often like 300 to 500 systems or platforms or applications within a particular bank. What's the opportunity for AI? Where do you see the opportunity for either releasing fragmentation of these systems or unlocking new sets of possibilities and opportunities?
I think this is wonderful question, and I'm happy to share my 2 bits. And if you see the modern banking which evolved and then further evolved in Indian context in the last 25 years, the very powerful concept came, which was relationship manager. And this powerful concept came from what internationally, right, we used to have.
Yeah.
So 3-4 roles evolved in Indian banking, which never existed in the pre-private sector banks or pre-foreign banks in India. One is a personal banker, and second is a relationship manager, right? And then, of course, the relationship manager itself branched out into a private bank, bank relationship manager, and into a remote relationship, virtual relationship manager, right? Into a customer service agent, into a call center agent, extension of IVR and telephone banking technology. So relationship manager itself became many in the front end, in the middle, right, in the back end.
Yeah.
So AI and these relationship managers all have access to a CRM system, right? Most banks, let's say, have some CRM system. Unfortunately, most banks have multiple CRM systems, right? And then when it comes to 360-degree relationship, a liability customer, a current account, saving deposit, fixed deposit customer, also being a asset customer, which is home loan, personal loan, car loan, needs to be collected from, right? There is a reasonable amount of genuine collection happening. Let's say customer has uh, intent to pay and propensity to pay, and but still for some genuine reason requires to be followed up for collection. All these are sitting in different databases, different CRMs. So I will be looking forward to innovation using agentic AI, where a digital RM, genuinely digital RM, can replace the so-called the virtual RM, the virtual uh, or a back-end customer service representative, or a call center agent, or a collection agent in the back end, in the mid office, back office, central processing units, whether it's outbound calling, inbound calling, all of this, if it can be innovation can be achieved. Innovation can drive transformation of the space of RM. I think that's one big area.
Actually, it's a very interesting idea. As you was thinking about it and speaking, I was thinking that if I can literally on my messaging, it could be WhatsApp or it could be bank messaging, because I do transfers, I do bill payments, I do uh, investments, I redeem investments. Um, mm, let's say that's one set of transactions. There are several set of transactions.
Yep.
But if I could just type them out on a platform, and depending on my relative behavior of access at the back end, it all could happen.
Yep.
Very seamlessly, without the process of multiple logins, multiple OTPs, multiple conversations. In some cases, high value transactions are different.
Yep.
And if that can happen and sitting like on my desk, that could, but at the back end, it needs a very robust microservices API architecture with rule engines to essentially talk to different systems and collate, and then fraud layer, and then a check layer to make sure that the transaction is genuine.
Yep.
But if it can happen, sort of some of the call center, relationship manager, all these conversations go away or could sort of be only level 2 or level 3, or level 1 gets, or most of level 2 gets automated. It could
Yep.
be pretty interesting.
Yeah, I think so what we call a true customer experience can be brought about. So what does an RM do? RM brings a personalized experience to you, right? RM claims to know you. RM knows whether you are going to meet him or her in the club for a personal meeting, or at your home, or in your office, right? So they know. So this, if we can achieve with all that you spoke, which are and using agentic AI and a good integration and a good architecture of bringing these knowledge databases, these islands of data, with the multiple APIs to access the data and exchange this data, the rules engine which will apply business logic, policy, regulation related checks and balances, and we can put an AI on top of it, agentic AI, which can bring this whole complete into a automation at a speed and generate a script, and then can read out and smartly interact. The true Siri in the making, or whatever, true Alexa, the true Eva of HDFC Bank. That's one space. I think, and the second space we did refer to a lot in our discussion is the whole STP in the mid office. It is very trade finance and forex, right? Both cross-border and domestic bills and discounting, trade finance, pre-shipment credit, book debt credit, working capital finance, push, the term loans, the multiple type of fund-based, non-fund-based, bank guarantees, letter of credits, a whole lot of invoice discounting. Lots of fintechs are in the space of invoice discounting, right? Or wanting to be the intermediary and disrupt. It's a complex space. Requires extreme amount of knowledge of compliance, knowledge of the product, how does the product behave, knowledge of how does the authorization behave, knowledge of credit, knowledge about customer, knowledge about what is happening in the customer's world, because they are all MSME, SME. It's still on the wholesale side, non-retail. I think agentic AI has tremendous amount of opportunity, as we have discussed, in not just automating, but powering with intelligence, right?
Yeah.
Reducing the fraud risk. You remember the Swift fraud, which happened few years back, I think 2018, 2019, right? Globally and in India. Uh, a, a cross-border payment transaction authorization for a trade finance or a forex operation in a bank goes through multiple factors. So what we call multiple factor authentication, MFA, 2FA, and it goes through multiple level of authorization. So multiple factors of authentication, multiple levels of authorization. So level 1 authorization could be done by core banking up to a certain limit. Level 2 could be done by the customer and core banking.
This has been a fascinating conversation. I had like a few rapid fire last question for you as we wrap up this conversation. We can chat for several hours, and I think we wouldn't have still extracted all your experience and knowledge on what's happening in this ecosystem. But uh, just given time constraint, I want to do this. One is there a technology tool that you wish you had greenlit faster in the bank?
Oh yes, the whole modern digital personalization journey based mobile and internet banking. I wish I could have kept it simple. I could have done a build vis-a-vis the decision I took as buy, because I still ended up building. So yes, the whole the mobile and internet banking app I built from, let's say, broadly in 2019.
What's a contrarian bet you would place right now in the bank tech area?
Contrarian ban.
Non-AI, contrarian bet.
Non-AI. I think my belief is that the hardcore infrastructure technology for large markets, large consumer population markets like India and some emerging markets, the core computing power, and therefore the core infrastructure cost will continue to uh, play a role in innovation, faster resilience layer, rather than the software layer of technology in the banks. That will continue to play some role. That's a contrarian bet. I mean, you will scale out, you will do cloudification, you will rewrite, replatform, but I think there is still a value in what the computer science brings to the table.
No, I think this was fascinating. This was a full circle from where we started. That's the beauty of this.
Yeah.
This ecosystem, massive, lots of companies that can be built, long lasting. It's been an incredible conversation. Thanks for spending time with Anurag and me. It's been a pleasure.
My pleasure. Thank you very much.
Thank you so much.
Thank you,
Munish.
Vishal. Thank you, Anurag.